My first question to Mahesh. And the theme of today's conference revolves around advancing policyholder interest. And with this in mind, my question would be, what is the context of innovation? What are the areas you believe that the general and life insurance industry needs to innovate to advance policyholder interest? And where do you believe other parts of the financial services sector has been ahead of innovation compared to insurance? And what do we have to do to be more relevant to today's consumers?
Thanks, Pawan, and good afternoon to everyone here. So it's an interesting question to kind of set off this conversation. So where do we really need to innovate? So I think the typical answer to that would be, let us use technology more smartly and look at how we can integrate technology within the processes that we run. But what I feel is that what really the insurance companies need to do as we move forward, especially I'm representing the life sector here. So I think a one-size-fits-all approach that insurers have to service their customers is something that needs to break. And I think the insurance company should look at actively designing the offerings that they have for the customers, whether it is products, whether it is service, whether it is technology or the process and the experience that the customers get from insurance companies throughout the life cycle. I think there is a dire need for mass customization. You can't offer a one-size-fits-all approach and say this is the best that we can offer. I think there is a need to really innovate from that perspective. And there comes the thought about what really innovation then means. I think that is where I think insurance companies have to then look at technology that is available around them. And there is, with the Digital India move really right at the peak, I think there is a plethora of opportunities for insurance companies to really tap into by way of technology availability, by way of integrating with partners that are outside of the insurance industry, by way of leveraging the government initiatives. And one particular thing that really comes to my mind is Aadhaar, for instance, has completely changed the way insurance in India is likely to be run. So there is a great opportunity for life insurance business to entirely do their business paperless. And while I talk about mass customization, paperless may not be the answer for every segment of customer. But there is a large segment of customer which is going to look at paperless way of experiencing life insurance. And that is, I think, going to be a game changer if rightly implemented and at the pace at which it is required to be. One other area which I really see as an important one coming along is payments, both receiving payments and making payments to customers. And I think with UPI, with Aadhaar-linked bank accounts, I think that is an innovation that really, it's time that insurance companies really ride on that opportunity and make the most of it to give the best experience to the policyholders. But coming back to what I started off with, I think these are the tools that are available, but innovation is all about looking at what does the customer really need and how do we use the resources available around you to provide the service that the customer really requires. So the one-size-fits-all, I like to stick to that. You can't have a one-size-fits-all approach when it comes to servicing customers. And I think there are capabilities that are available around you. You have to pick and choose the ones that you need to implement and choose the customer segment that most gets benefited through that. And I think that is where innovation really lies. There are opportunities available all over, but which one do you pick for which customer segment is where the innovation really comes into play. And I think if I look at the companies in the industry, there are numerous examples of how innovation has really played a big role in servicing customers. And I truly believe that this is just the beginning, and there is going to be much more in the pipeline as in the years to come. So I'll stop at that for the moment.
Trevor, do you have much to add to that?
Well, Mahesh is much smarter than me, so I won't do that. But first thing, we notice in innovation, there's life people this side and there's... Sanjay, that's because you didn't give us an award, so we sat together on this side, all right? But next year. From my point of view, maybe if I just, rather than get into too much detail, I'd say three things I think the industry, and I'm talking life, general, health, and including asset management, will have to adapt to and change to. I think the industry will change from indemnity-based industry, which we predominantly be, whether we're life or general. General perhaps have expanded by having, for a number of years, risk management as an extra service they provide. But I think we're going to go more towards prevention and insurance being more relevant than just a cold thing that if something happens, there's a payout. I think the relevance of insurance become more about prevention and partnering and engaging the customer in a relevant way beyond a payout. And it's already started. Yeah. It's already started in India, general side, health, looking at pricing products related to fitness and health. Wellness is beginning to partner with insurance companies, so I think that will happen. If you look at the UK, and I look at my own company, Aviva in the UK, today you are able to buy a household insurance for flood, theft, the usual, without being asked one single question. You don't even have to write your name and address on the application form. They can know enough data points available. They know where the flooding happens in the UK. That's available, centrally. They know where the burglary areas are. Yeah? They know what your house is built of, what the construction is, how old it is. Without asking you a single question, they know it because they've got the data points available. And they can give you an insurance policy, one, for the indemnity part with that data, and price it differently because they have better data. And two, give you a gadget which monitors the water in your house. So when it gets cold in the UK and the pipes burst, it already knows there's a change in the flow of water. So before the pipe bursts, there's already an intervention to stop it happening. Not because we want to reduce claims, but no one wants to lose all their goods or their personal belongings. Yes, they're happy, it's indemnified, it's replaced, a new settee, but how can you replace photos and personal trinkets? You'd rather prevent it. So I think my first point would be we've got to move from indemnity thinking to prevention first, with still indemnity there just in case. Number two, we have to move away from being siloed. And I mean that from a regulatory point of view, life regulations, general regulations, health regulations. A customer just wants the best health care for their mother when she goes in the hospital. They don't need to care about the complexities. Is it under this regulation or that regulation? They don't need to know it. They just want to know their mother's going to get the best when she goes in the hospital. And we've complexed things by making all these separate regulations for separate silos. We have separate channels. You go into a bank, you can't go anywhere near brokers after that. You go through a broker, you can't touch a direct agent. If you go through the online channel, you can't go anywhere else. Customer doesn't. Does Amazon make you do that? Amazon experience, and I know we're more complex, but fundamentally customers are believing and loving the Ubers, the Amazons, the Flipkarts of the world. And they're doing it in their stampeding of feet. If we don't get to that level of customer experience, then we are going to die. So I think the second thing is we have to hide the complexity, because it is complex, I'm not denying that, but we've got to hide it, and in the curtain, behind the curtain, the customer, what he sees is simple. Dead simple, no complications. And the third one is advice, whatever happens, will still be there. And that's the last third important bone of it. The advice delivery might be different, but customers will still need advice. All the research we've done, digital intervention, digital supported, is the more accurate, I think, description of the way industry is going. Customers still want to talk to someone before they make the final decision to buy or not to buy. Yeah, so from a broking community point of view, you're independent. Well, you're supposed to be independent. Yeah, and look at all companies are the best solution. You act on behalf of the customer. As long as you recognize advice is always going to be there, but the method of advice might be by Skype, it might be by Messenger, but there'll always be advice, and you just have to evolve to how you deliver that advice. Do you want some examples?
Oh, that's brilliant. I think this is great. We can build on this.
I gave you one example of the Aviva product, but maybe data point. There was a survey recently by the Economic Times trying to understand, for customers of banks, what is the best channel or method of service they now believe in from the bank. Website, e-banking, 44% of customers said for a simple transaction that is their most preferred channel of doing a simple transaction. 44%. Branch was 9%. An app was 20%. SMS was 9%. So if you take digital total, it was over 60%. Preferred that way. It was a more complex transaction. Website was still 30%. WhatsApp, the app reduced quite significantly down to about 12%. SMS was only 2%. Branch jumped up to 21%. Still less than web. But it shows there's an intervention still sometimes needed, but people are moving, enjoying, and preferring. It was a preference. They preferred the web. I think that's a shift in behavior that we've got to recognize, and we're way behind being able to follow and support that behavioral change.
That's fantastic. Thanks for that. And Casey, can I request you for your views on this matter?
Absolutely. I fully agree that I think one of the biggest opportunities and also challenges in the industry going forward is actually the availability of data. And whoever controls data will have the strongest position in terms of how to use that. And if you look at insurance, it's a subject of probability and actuarial science. The more data becomes available and more accuracy improves, the more interesting it's going to become to manage in this industry. But the way that in the last 8 years that I've been here in India, especially in Shriram Life Insurance, the way that my mindset has changed a bit is to try and see how is innovation being used to solve specific challenges and problems that we have in the industry. And if we look at the industry today, there's a very big cover gap. There's a very big gap in terms of insurance penetration in India. And the big part of that gap does not lie in the metros and where it's easy to reach customers. A big part of that gap is actually lying out there in rural India and in the mass market, the Aam Aadmi market, where it's very difficult to reach to prospective customers in those places. So the question is, in my mind, if you want to increase penetration in India, and if you want to close that gap, plus if you need to close that gap by going out to where customers really are, that requires a different type of mindset and a different type of innovation. Now, the innovation isn't always technology. The innovation could be anything else. But how do we ensure? Because just building more capacity to do distribution and reaching out to the furthest points and expanding the company in that way is quite an expensive proposition. So how do we ensure that we get to the furthest villages and cover the customer and the families where the loss of a breadwinner will truly be devastating to that family? I believe that this is our biggest challenge that we have in the industry at the moment. So by solving that, technology is now starting to become a really big help. The availability of data is becoming a really big help. Digital India is helping a lot because now we're seeing more and more people coming online, more and more people having smartphones. So more and more people can be reached in that way. So now how do you solve the problem of using that data in the right way, and what should be the business model to support the person, the broker, the agent who is selling at the furthest outpost with the right information, the right lead at the right time, so that this can be closed. So I believe data, availability of data brings good challenges and also good opportunities for us, but we have to try to focus our innovation efforts on how do we reach to the furthest point. The one point that I want to add to that is the customer-centric focus. It's absolutely true. It was mentioned before that we cannot only have a one. Okay, if you go to a specific niche there, it's a very, very small piece of the population. In India, if you focus on a specific niche, it's probably the size of South Africa itself. So there's a lot of opportunity in growing businesses by going into specific niches. But for that, we have to understand, what do the customers in those segments, sub-segments, and niches really need. And those needs, we've done quite a lot of work on the innovation side to go and reach out and have long conversations with our customers that are in deep rural. And it's interesting the answers that come out of there, because it's not only if we go as a life insurance company, the needs are obviously not only in the life insurance space. It's a combination of a few things that are really, really important to solve. So the question becomes, how do we solve those few things in either a single product or a combination of products or in a solution that will really make a lot of sense to potential customers in that space. If you can crack that, then suddenly a whole new sub-segment or a whole new niche opens up, which then helps to expand the business.
So, it's great to hear from the leaders of the life insurance industry that, micro-segmentation, making it easy for customers to buy, perhaps even without signing a proposal form, reaching out to the rural masses in India. So it'll be great to hear now from the general insurers, where do you see innovation in the insurance industry, in the GI industry, and, what can we do to really enhance policyholder value?
Okay, thanks, Pawan. Let me break this problem from general insurance point of view in terms of product, processes, and technology. From product point of view, we are seeing some amount of innovations coming up with the parametric or health and other things. But is it that this product has been used in exponential way by using technology, what probably Lemonade has done in home, or what probably Metromile has done in Italy, or what probably Slice has done in demand-based insurance? No, it has not. I mean, we have not been able to club technology to scale innovations. That's probably the challenge in terms of product. In terms of processes, we are seeing innovations in multiple companies, but those are all linked to reduction of cost. I mean, how do you reduce cost in terms of coming back to technology, let me give you some examples what we as a company are doing. Say, for example, cashless health. We have developed a deep brain system wherein the moment you send a cashless request, the robot will go back into my system, check your policy details, come back to you saying this is your sum insured and this can be the amount of authorization allowed for a disease like, say, cataract, right? We have developed a chatbot. We call it as Myra. I mean, I'm happy to share with you, last month we issued 2,000 policies without a single entry by any of my data operators. So you can actually use technology to, smoothen a lot of processes and make it much more easier. We also have a system called iPartner for the channel partners, wherein 30% of our policies are today issued in the commercial lines. I'm not talking retail lines. In the commercial lines are issued by my channel partners directly, right? And if you see, come back to say retail in terms of motor policies, 80% of my policies are issued through my systems, through my channel partners. So technology has been used in terms of how do you simplify the processes, how do you ensure that the customer gets the best in terms of faster services. Coming back to data, some of the points that was raised, all I can say is there is ample amount of data available in the systems, but there remains a challenge in terms of correlating this data and giving a faster solutions. For example, in case of claims, do we look into the CIBIL score of the customer? If the CIBIL score is high, it's a proxy that he's a good customer. So how do you correlate those customers' data around that? In terms of innovations that's happening probably in the other part of the industries and what we can do as insurance industries, some of the things to replicate probably is what has happened to microfinance in banking, or what has happened in terms of how they have entered into the rural corners using payment banks. We need to do a lot of work in terms of microinsurance. Today, we don't have a single company which is only focusing on microinsurance. Can we do some more work around that? There are payment gateways coming up. How do we ensure that use them? There are mobile technology coming. The banking system has utilized it like tremendously. As an insurance industry, how do you use the mobile technology to enhance penetration?
That's fantastic. Ma'am, as a customer representative, where do you see the need for the insurance industry to innovate in terms of enhancing policyholder value?
I think now time has come. It's a win-win situation for all. Because of the way social media and digital marketing and with all this Aadhaar card and various techniques that government has gone into, now everybody has come under the scanner. The rural lot who were ignored by rest of the country now have come into the mainstream. And now it is for you all to fight it out, how you take this slice of this particular business. There's so much business out there for the insurance companies, brokers, agents, whoever are involved. It's a huge pie. This pie was not available earlier. So innovation is the only way to reach. Whoever is the smart cookie, he gets the pie. Like what he's talked about, I think it's a great innovation. I'm so happy to hear these schemes. at a click of a second, your thoughts are on how to get this customer to understand his policy and agree to these terms and make him aware. The whole problem is the claim settlement is the issue. As you see, since morning we are seeing these answers from you. How do you maximize this value for a customer, for a policy holder? How do you make him happy? You make him happy by telling him that these are the products we have, this is what you need, and you don't need that, and make him sign on that. What is happening now, you're giving this huge policy and you're making him sign, and at the end of it, you read it all and you signed. Poor guy really doesn't know. Just like a patient goes to the doctor, we just go to the doctor. We don't even ask questions. We just take the medicines and just walk away. We don't even really say, why did I go through this? What is happening? Why am I going through the surgery? Nothing we ask. We just trust the doctor. He can't be wrong. So like this, India, we just trust our insurance company, broker, insurance agents and all. Now it is going to change because now they're going through some hassle of getting misunderstanding. So now that you have a social media and innovative way of reaching out to the rural areas, and now don't underestimate rural areas. Those little children who are reading these advertisements, they're going to say, Papa, Mama, Grandpa, please take this insurance policy. They are going to fill up these policies for you, the younger generation, the future of India. So it's a great win-win situation. I think innovation is the only way to go forward, to make everybody happy.
Shall I?
Yes, Sushant.
On the same point.
Oh, yeah,
All
absolutely.
right. So I think, good afternoon, everyone. Before I share my thought on this, on innovation and definitely the need for more innovation, we must not forget that as an industry, we have a good track record of innovating. So it's not that the industry is not innovated so far, and be it in products at the top end for the, for the customer who knows what he wants to buy. There are new products that have come out between, let's say, over the last 5 to 10 years. And even as we speak, there are newer products getting launched, of which we read in the papers: inherent defect insurance, parametric solutions for solar and wind power farm, power generating stations, solar warranty, you name it, title insurance. So innovation on product side is happening in the industry. Innovation in delivery is happening in the industry. We had only one channel earlier, agency channel, which was predominant. Brokers have come in. Today, all of you have invested your time and effort and money into setting up this big channel, which is, finding favor with the clients. So channels have come in. Bank assurance has become a channel. So delivery channels, we've innovated as an industry. Claim settlement, we are using better technology to settle claims to the satisfaction of clients, more and more customers. Yes, can we do better? Undoubtedly, but innovation in claim settlement and customer satisfaction is also an investment. And the most important point, as an industry, we have gone beyond just these three, and we are offering value beyond indemnity. And examples of that, and very, very traditional examples that everyone can relate to, is risk engineering, loss control services. We are going beyond indemnity and helping clients to reduce the exposure that they have and therefore not suffer losses in the first place. So I think that's the track record. Do we need to do better? Definitely we need to do better. And if I were to share my thoughts on where we should be focusing on while products, service delivery, claims, all of these are very, very important elements, I would actually take a step back, and my belief is that if we want to take the insurance penetration from 0.7 to, let's say, even 1.4, it won't really go to 1.4 by selling more insurance to the people who already buy. And today, the focus of all of us, the industry, is really largely confined to the bought market, to the customer who's already buying. We are all competing for that customer. I think we need to take a step out of that and say there is a very large, underserved, unserved market, the wealth at the bottom of the pyramid. And we need to look at that customer, and we need to say, and we need to innovate in how can we get to that customer and get that customer to be an insurance buyer, an insurance believer. And to do that, innovation is really required, first of all, in the way we communicate the appeal the value of insurance. So if we are able to communicate the appeal of insurance to that last customer in a very simple way, so that the customer starts feeling that, yes, here is something of value, I should spend on this, I should invest on this, then we'll get a whole set of new customers into the market, and that will help the industry grow more than the industry has grown in the past on the back of existing customers buying more insurance. So that is one thing, the messaging of our appeal. The second is, if the messaging of our appeal succeeds, it has to be followed with a very simple product. So innovation in simplifying. Simplify to enhance value. Don't make, I mean, we had the poll right at the start of this panel discussion, and the choice polled by everyone here was simple but comprehensive policies. I think we need to, it's a difficult exercise to achieve simplicity and comprehensiveness. So we need to build for what people need and keep it simple. You can't and should not attempt to offer the most comprehensive cover available to even a simple, to fulfill even a simple insurance requirement. So I think that is something which is important in terms of simplicity and therefore innovating to keep simplicity and enhancing value in our products. And finally, using fintech, insurtech technology to deliver this simple product as effectively as the FMCG industry today delivers a sachet of hair oil or shampoo for 2 rupees. We haven't gone that far. We have to think how we can go that far. And if a customer can, buy our policies as simply and with as much ease as the customer buys a lot of other products, that is when we would have really broken the barriers. And for me, I think innovation needs to focus on those things. Thank you.
Vikram, as someone who helps insurers settle lakhs of claims and someone who has invested, a lot in technology over the years, how do you see, from the claims perspective, how do you see the market evolving, and where do you think we need to bring innovation to bear to help our consumers?
Sure. Thank you, Pavan. First of all, I have to say thank you for having me here. I see that the word TPA had gone amiss in the conversations broadly, and I really appreciate IBAI and Pavan, you having me on the panel. I represent an industry that has been most often playing second fiddle and we've spent a lot of time mimicking what you've, as brokers or insurers, expected of us. But the good part of the story is that innovation came last to us, I think, but I think we've kind of attempted to play catch up. And because we had fewer legacy systems to deal with, I think there's a lot more happening in India than I would have expected to see at this point in time, than even when compared to the rest of the world. I think at the end of the day, patient experience, and I will only limit it to patient experience, as people go in, as a policyholder, as you go into a hospital, the notification changes. You become from a policyholder to a patient. And as we start thinking about patient experience, there are 2 levers that become important. One is, and I love what Trevor said, of course, it was about the life insurance industry talking about indemnity-like thinking or indemnity thinking to prevention first. I think in many ways, a lot of the health insurance portfolio is still very indemnity-like thinking based. We're all acuity based. We're all looking at hospitalization as being the big problem to solve for. And I think there's a lot happening there. There's, all of the insurers here, general and life, I'm sure, the general for sure, the health insurers are talking to hospitals. They're spending a lot more time integrating with hospitals, getting structured data, and making sure that that whole claim cycle is more evolved and people can, at least deliver some first pass claims processing that happens. But the true mystique or the true opportunity there is when you start thinking about As general insurers, life insurers, and health insurers start building out a much larger portfolio of ambulatory care, outpatient services, in a market as fragmented as ours, I think the only way you can solve for it is through innovation. I'll give you a simple example. I think if you wanted to run a prescription drug benefit or a pharmacy benefit in India, I think in the developed world, you can have a pharmacy every 5 miles. Everybody has a car, can drive into a pharmacy, pick up what they need, and go back home. In India, if you really wanted to do that, you need a pharmacy every 70 meters. People are not willing to venture beyond 70 or 100 meters to go out there and solve for a problem like that. And so it's not about physical infrastructure, but innovation around what's happening in the e-pharmacy business in India, and I think that'll happen a lot faster than you've seen anywhere else in the world. What's happening to how physicians write prescriptions, to all the way down to how diagnostics and imaging and preventive care actually form part of everything that we'll do in the ecosystem. And I cannot tell you more that probably we're still going to see so much more disruption, because if we just think about it in the most, if you just wear the traditional hat on, if you put on your traditional hat and get out there, you're never going to be able to solve for it. You're going to go to 9 cities, 10 cities, and that's it. For a country like us, it's not even 300 cities. You're going to have to go to 1,000 towns and cities to be able to solve for this deep penetration and this deep integration that we're hoping to do. So while I haven't answered the question on claims innovation, I think it's there. I think there's a lot more, and you'll see in the next 12 to 18 months a lot more happen. We've been laggards, but I think we're playing catch up for all the right reasons. I think the real opportunity comes when you start looking at ambulatory care, preventive care, outpatient care, and solving for those pieces. Thank you.
In the interest of time, I think we'll now just do questions one each. So Trevor, let me start with you. Innovation also requires a regulatory framework that makes it possible for you to innovate. So do you feel that the current regulatory environment allows you the freedom to innovate the way you would like to? And if not, what are the changes that you would like to see?
They're waiting for the answers now, aren't they? Look at that gentleman. All right, I'll start by saying reality is none of us can keep up with the pace of change today. So when I upgrade my phone, I still today haven't got a clue about all the functionality of it. So the real world, regulations is no different. It can't keep pace, and we have to accept that. Because we as individuals can't keep pace neither, so that's not a criticism of the regulator. However, I guess with the digital world and the speed and the agility of digital, it's not like in the old days you take 2 years to build a new business and then you open the doors, or in an insurance company we do a project to build a new system to do X, Y, Z, and it's an 18-month project. It's got a cost and benefit analysis, and then we switch it on. Today it's like every 30 days, every 60 days you're doing something. A startup business somewhere today does something and it opens the doors within a couple of months, and it continually is incrementing improvement. So if we recognize the speed and recognize as individuals and as regulations they can never keep up, is there a way that we have to look at it differently? And although it's been tried in other countries and they've changed back to that way, we keep moving from principles to a bit more micro rules and then back to principles. And in the end, to allow agility, you do have to have some framework of principles, rather than microscopic rule 1 and here's another 1,000 conditions underneath it. That's countrywide. The UK is no different. The FCA went from principles to very micro, and now they're challenged on digital because they've got to be much more adaptive and proactive on the digital side. So they're now moving a little bit more towards principles on digital, but still keeping micro on the other stuff. It's a challenge, but I think, honestly, there's got to be, the industry has to be more responsible and less silo. We've got to come to these events as an industry sometimes and put our industry hat on, more than our Aviva hat or our IDI Pendle hat or whatever, Shriram hat, or we've got to actually put an industry hat on sometimes and together talk with the stakeholders, the Vision 2030 of the IDA, and I'm the controversial foreigner, so I'm allowed to say it, but the submissions to the IDA from the industry life side, I can say, were all individualistic. There was no commonality at all. And there was some people who wanted more commission, some wanted less, some wanted something different in commission. There was absolutely no common theme, to be honest. And that's because we all looked at it from our own individual hats. So, simple answer, regulators certainly have to adapt. The digital world will force that. How it can be done, the only way I can see today is principles, but this time the industry growing up and being more responsible as a partner with the stakeholders.
So the message being that let's not look at
Is
this
that
in
okay? Am I
silos.
still okay with that one? Yep, okay.
Yeah. Sushant, can I request you for the GI perspective? You're in a company which has been very innovative. So how do you feel the regulator can be more supportive in taking this forward?
So again, I think if you look at the track record, my view is the regulator has been actually driving this, and we need to appreciate, and I'll cite specific examples. Let's take the file and use on the corporate side for commercial products now turning to use and file. It's a self-regulation that the regulator has given to the companies and said that if you have a product management committee, then that committee needs to do the job that the regulator earlier had undertaken to do themselves. So the regulator has actually made an overture to the industry and said, we rely on your maturity and we are allowing you to do this, which is use and file products, which is innovate products at your speed for that set of customers who are on an even footing with you because they are B2B customers, right? B2C customers, retail customers who are not very informed and aware, the regulator is saying, I still need to look at the products. The first step, however, the regulator took. So that's one example. Take another example. We talk about digitization. The regulator came up with regulations which kind of promoted or initiated the repository, the electronic repository for policies. Okay, who's driving it? So I think my personal view is we have a lot of support from the regulator as an industry. Does it end there? It doesn't end there. The regulator needs to continue looking at, and the track record shows has looked at, and will continue to look at changes that happen in the larger environment. And as industry, we need to engage with the regulator. Trevor just made a point that the industry also doesn't speak in one voice what the industry wants. So I think somewhere that dialogue needs to mature a little bit, but to me, we are on good ground, and I don't think there's a disincentive or a problem in innovating if you want to. And one quick, large third point, the regulator has been, on the product side also saying simplify and have equity in your policies. Now again, within those two parameters, you can do what you want. So.
Great. So, so Sushant's basically, telling us that the regulator has set the stage and really now it's up to us.
Yeah.
Fantastic. Technology has been a big disruptor worldwide in various fields, including retail and travel. And, for example, electric cars may disrupt traditional car companies and maybe even energy companies. Some companies are using technology to, maybe reduce management expenses, as you pointed out, or make it easy for consumers to buy. So what I want to hear from you, Virinder, is, do you see innovation in terms of new insurers coming in who may disrupt the market and take away your business?
Okay. I'll give a very simple thing. Love technology or else the customer will not like you. And the customer expectation is changing. And you see, if Amazon can deliver a product in 4 hours, why can't we deliver a policy in 4 hours? They're very simple expectations. We expect you to deliver a soft copy in 4 hours. We are not able to do as an industry. So the first rule is love technology or the customer will not like you. And if you don't innovate, the customer will initiate discussion with another broker, another insurer. That's the rule I will say to all of you. Innovation and technology has to be part of both the life of broker as well as insurer.
So coming back to the specific question, that do you feel that that you're going to see insurance industry being disrupted by a different mode of organization from the way we are?
No, this is a new stream. If you ask me, we will see soon a new set of products coming in, new mode of distributions. This will shake up a little bit the industry, which is good for all of us. If the expectation of the customers are higher and as the industry are not delivering, somebody has to pay a price, whether it is an insurer which is not loving technology or not using technology. But in terms of disrupting in terms of technology, there is a time to go. I mean, ultimately the customer needs claims, and it is not only technology in terms of selling, you also need technology in terms of claim servicing. So both the things are required to disrupt it.
Fantastic. And Casey, from your perspective, how do you see from the life side, do you see innovation being an enabler, or do you also see perhaps, innovation resulting in new kinds of insurers who may actually take away a traditional market?
I think on the life side, as I said earlier, yes, innovation is our friend because we really need it to grow the penetration in the industry. There's such a lot of space for the industry to still grow and for penetration to still grow that we need the innovation to happen. Having said that yes, with that comes risks. With that comes the risk of disruption. If Amazon gets a license and starts selling insurance in a big way, I'd be nervous because there again we come to the access to data and the access to the customer side of it. I think to some extent, the existing players in the industry. I mean, we talk about the regulatory framework that needs to also adapt and support the growth of the industry and technology. But to some extent, if that doesn't happen that fast, the existing players are to some extent shielded. It's a bit of a barrier to entry. If you come in as an insurtech who can be very strong, but you might be limited by current regulations in terms of how you can sell your life insurance or your general insurance policies. So it may take some time, and it may allow for some opportunity for existing players to adapt. But yes, there's definitely a big risk for disruption. And actually, to be very honest, there's a big need for disruption. Now, the question is whether we're going to sit and wait to be disrupted, or whether we'll be disrupting it ourselves. As we see in some of the other companies where, some of the South African companies that I'm aware of are creating insurtechs inside of the company. So where they see that, let's say, the current traditional brand of the company is not supporting or is not really that appealing to millennials, they've actually created an insurtech inside of the company which has the backing and the support and everything else of the company, but is branded completely different and goes out with a completely different marketing strategy. So there are different ways of attacking this problem, but I don't think it is something that we should be shying away from. It is something that we should take with open arms and try to find ways of doing it ourselves.
In the previous panel as well, there were talks about how loss adjusters can partner and TPAs can partner with clients. So what I find in the practical world as a broker is that a loss adjuster appointment or TPA appointment is normally the prerogative of the insurer. So I'd love to hear from you, Vikram, in terms of how do you see the possibility of clients being allowed to choose their service providers as a matter of right? And what is the impact you think that will have in terms of innovation in claim servicing?
Sure. No, I just on the previous point, if I could, Pavan, with your
please.
permission,
Absolutely.
just say two words. One, I think when you talk about disruption in this space, I always think about it as, will disruption go down the line of what ING Direct did, which was opening an e-banking channel in that chain, e-banking? Or will disruption go down the cryptocurrency route and ask for whether all of us are necessary evils or unnecessary evils? And so I think there's a long conversation that you could have there. When it comes to, I think when you ask us as an intermediary, as like the brokers, if I looked at what the rest of the world has done, the rest of the world, both for the broker community and for the TPA community, has left choice to the policyholder. And I would assume that the same rules would apply in a market here. If you looked at large group policies today, you do find that the group does have some say in co-selecting, if I may use that term, to co-select a TPA as they go down that path. But when it comes to a retail policyholder, that doesn't really today apply. Although I have to say the regulator, very early in their days, back in 2009, and I think it was a landmark notification for me, that talked about senior citizens. And there, for senior citizens, it was specifically talking about the choice of TPA to be left to the senior citizen, and that they should have at least the choice of TPA independent of the choice of the carrier or the insurer. And if it applied to senior citizens, I would only appeal to the regulator that it applies to junior citizens too, because I guess citizens are citizens. And so my assumption is that that does exist already. It isn't something that's very well practiced today or implemented, but at a point in time, as much as all intermediaries are looking for that choice, and I think Sanjay talked about not only choice in who the broker is to place the policy versus the broker to handle the claims, versus the broker doing 5 other functions, and you kind of split that. You might just find that for all intermediaries, we go down that path. It'll be an interesting journey, but I would hope that at some point that does come into play.
So Sushant, I'd love to hear from you regarding loss adjuster appointment. It's really, we find that consumers don't have much of a choice, and how is the GI industry responding to the consumer need for to have say in how claims are handled and those kind of things.
All right. A third-party administrator or a loss adjuster, delivering the same post-claim service to clients. I think the fundamental question that we have to answer is who's responsible for the service delivery and for meeting the level of service delivery that is committed while selling a policy. If the customer says, I'm responsible for the service, for extracting the service delivery, there is a different case. There's a case for the customer to then argue that I will select my own TPA, for instance. And large groups do have that. They say that, look, we have been carrying on with this TPA for a long time, and therefore we are comfortable. And the insurer typically, if they have a tie-up with the TPA, would more often than not agree to continue that arrangement. Losses on the property casualty side are not as frequent, so the case is a little different. But again, the fundamental point is, if the insurer is being held responsible, and today under all sorts of consumer protection legislation, as well as I think from the perspective of the ombudsman or from even the regulator, it's the insurer's responsibility to deliver the service. If it is the insurer's responsibility, then I think the choice of who the insurer will use to be able to deliver as committed should be left to the insurer. If you take the choice away from the insurer and yet hold the insurer responsible for delivering what is a very critical aspect of the adjustment and assessment of a loss, then you're kind of, leaving the responsibility in one place, but taking out the ability to act from that quarter, which I don't think it's a very good thing to do.
I think it's a great response and a great spin on it, but I think, the question, I think, from a consumer and maybe a broking perspective, and which I'd like ma'am to respond to, is the question of independence. With a TPA and a loss adjuster being independent, licensed adjusters, why should perhaps, as an innovation in claim settlement, that customer choice should not be perhaps paramount? And what would be your views on that, ma'am?
Honestly, simple customer doesn't have any idea whatsoever. I mean, they're a little lost. You really have to guide those customers. They have no idea where to go, whom to choose. They don't even have least knowledge on this. Somebody said in the morning, I think Mr. Srinivasan, that people should be made to aware about how this whole process is going on. They should be educated. People need to know much more than just the policy. Where to find how to go about the claim, and the surveyor, if he has not come within time. I mean, how many people really know they can, before going to consumer courts, they can just write to the regulator saying they have supposed to send a survey report within so-and-so time. A small shop owner, some insurance policy, whatever. They have no idea. Although the doors are open to them, immediately regulator will look into it and help them out. Luckily, we have an amazing regulator right now, very proactive to help the consumer, customer, and the policy holder. At the same time, they're balancing everything. This awareness has to be brought in by all the parties, the insurance companies, the brokers, and the agents, and they have to educate the customers. They have no knowledge whatsoever. Between you all, you know what is the right thing, but they do not know. You take it from me. You have to be very smart to know, and they really don't know. They're pretty simple, and I think you all have to help them out. Because with innovation happening, with digital technology happening, and social media harassing people on any issue, people will put it on the Facebook, and that's the end of your company. Just saying. So you have to be very, very proactive, because these young lads are all on computers. They can fix anybody if something is going wrong. So it's better you comply with everything and inform the policyholder and advise correctly. Don't let him litigate for lifetime. That is where your help is there. All of you should get together and do it. Otherwise, you will lose your clientele.
Thank you for that. In the interest of time, we've got about 10 minutes left, so I'll ask Mahesh for a final comment, and then we can move perhaps to, questions from the audience.
So I think Pawan, thanks. Good discussions, good points made by everyone. I think one thing that I would like to kind of add here is that I think distribution can really play a big role here. And we talk about education, talk about customer awareness. I think there is a need for insurance company to engage very well with distribution so that the products that are being offered, you could simplify the wordings. You could do whatsoever you can do at your end. But if it is not communicated to the customer, then whatever simplification you do, whatever innovation you try to do, it doesn't reach the customer at the end of it. So I think as a passing comment, I would say that there is a very important need to engage very well with distribution so that whatever you're trying to do for the policyholder at the end of the day reaches the policyholder. And there should be a huge effort made by the insurance companies and distributor to really make that awareness go right down to the bottom of the pyramid and make sure that the offerings that insurance companies have are presented in the right form and manner to the people who really need it. And I think that calls for a lot of innovation. That calls for a lot of innovation across all streams, whether it is technology, whether it is training, whether it is building knowledge management systems, whether it is building human capital, because life insurance at the end of the day is a long-term product. So are you going to carry that knowledge through generations of employees and distribution so that the customer who bought the policy, knowing that it is going to be a 20, 25, 30-year-old policy, is getting the service that he was promised when he bought the policy. And I think that can happen only if the awareness is built through the line, right from the company to through the distribution and to the customer. I think that I think is very important, and that's where I think innovation would play a very key role, and which is the subject matter of today's discussion.
I think Trevor has something interesting.
Yeah, can I just say, because I think the previous session as well, the customer doesn't understand the policy, doesn't understand what he's getting, doesn't understand the exclusion clauses. And ma'am, you're absolutely right. I agree with you. And I think what excites me about digital, and let me share one thing. So many people in the room hopefully might have heard of Amazon's Alexa tool. If you haven't, it's based on Internet of Things, so it's really, you use it more as a little tool at home, and you phone up or connect to it and say, put the heating on the way home, or put the air conditioner on the way home, yes, or lower the temperature of the fridge, or record this bit. But it also, you can ask it, where's the nearest Chinese restaurant? Yeah, who's got the best deal on dessert and coffee? Those sort of tools, we're just experimenting with Aviva now to use it for insurance. So if a customer who said, well, hang on, how long do I have to pay my premium for? And Alexa will tell them, yes. And how do I make a claim? And that's what excites me about digital, to get that understanding, that education, instead of us always just doing campaigns and television adverts and more brochures. And these digital tools, I really think, are the best thing for awareness, education, but what I would say more important, understanding. Understand that this is good for you and it works for you. and you can continually ask questions to reinforce. And anytime you need something, so yes, we'll have chatbots, we'll have call centers still, but I think these give wonderful tools, which you said the youth particularly would love them, but it's simple answers. Beyond all the policy conditions, it's a simple answer to a very simple question. How do I make a claim? Yeah. Is this covered? So I just wanted to come back and say that's what excites me about digital. I think some of the challenges we have, digital really can make this industry much better and more gauged, and the trust between customers. The last point on the disruption, people feel, I don't know, I got the impression people are fairly confident that, yeah, there will be disruption, but we're okay. I'm a bit more concerned about the insurance industry and broking. And there was a Boston Consulting Group survey very recently across Asia Pacific, which I was asking customers in different countries, including India, but Hong Kong, Singapore, Thailand, all with them. What do you like about InsurTech? What is the best things about InsurTech? And they said claims, faster, easier, more personal, and service. What do you like about insurance companies? Trust and brand. Now, trust was not because we don't missell, because we do it in life insurance a bit, as Sandeep earlier said, but it's more about capital. It's very difficult for a new business to get into life insurance or general, but life in particular, because it's a big capital hurdle. So we've been protected. Banks and other industries have been disrupted, but we're still a bit protected because there's capital hurdle. But reality is, if the customer is saying InsurTechs are better on claims, better on service across Asia Pacific, that's a threat to us as an industry, it's a threat to the broking community, that we've got to up our game. Yeah. And does that mean we have to suddenly become InsurTechs? No, maybe we partner with InsurTechs. Don't be frightened of them. To me, we should be partnering with these new ideas, not trying to create everything ourselves, but look for the smart things other people are doing and alliance partnerships to get the best for customers. Sorry, so I'm a bit more concerned, but I know we can still beat them.
That's fantastic. And now I think we'll throw the forum open for questions. About 5 or 10 minutes. Yes.
Can you hear me? Yeah. I'm Kapil Mehta from Secure Now. My question more on the general insurance side. Many of the claims issues are complicated because there are multiple stakeholders. So, on the health side, you'll have a discharge takes 7-8 hours from a hospital, even in a cashless case. You have a hospital, you have a TPA, you have the insurance company, you have an intermediary. And similarly, on the surveyor side, there are 4 or 5 different entities involved. My concern is that whenever so many different independent entities are involved, it becomes extremely hard to find a solution which is best for the industry. And for everything, we can't sort of escalate it to the regulator to sort out all the different parts. So how is that going to work? Because not everything is in the control of the people sitting here in the panel.
I think, Vikram, you'd be best positioned. He's talking about the
No, I guess, yes, there are many stakeholders. I think in the morning session, you heard about cashless solving for a little bit of it, but the 7R problem still exists. I don't think there's a simplified answer to it, but today, at least us as intermediaries, general insurers and health insurers are all working to try to get as much information from a provider, whether it's a hospital, a clinic, or a doctor, in machine-readable formats, in structured data formats. I think as we begin, in the illustration that was given earlier, saying if you went out there and said, in the West it's all simple, you can go out and you can buy your house insurance without having to even talk to anybody because they know where flooding happens and flooding doesn't happen. I guess we're getting to the point in certain interventions, at least on the inpatient side as an example, where you can build predictable models. And you're beginning to at least understand how you would reimburse a hospital. If that would happen, you'd actually see a lot more the 7R becoming a half an hour or a 1 hour solution. The second half of it is actually technology that you're leaving at the hand of the individual, because the policyholder or the patient is the smartest in solving an exit for himself from the hospital or herself from the hospital. But the minute you give technology, for example, in our case, we have a piece called MediBuddy, which we have over 1 million users today who actually use it to intimate discharge even before the hospital intimates discharge to us. In a situation like that, we actually are able to get back to the hospital with all the relevant information well before the hospital goes through their internal processes to get back to us saying, I have a patient who's ready to leave the hospital. So I think there's convergence that's happening. This is great for the inpatient market, but the outpatient market's got to be a lot more real time, if I may use that term, and that's a space that people are struggling. People are solving for it, but I think there's a lot more innovation happening outside of the insurance industry, people that are out there solving for pockets of problems coming out there, which I think the insurance industry will absorb into itself as we go along and solve for that.
Just to add to Bikram, there are technology available in terms of blockchain to connect a customer, his family doctor, his OPD, his hospital and insurer. The moment we connect our policies to Aadhaar, it is possible to build a chain. And when a customer files a claim, we can actually know whether it's a pre-existing claim or not. When has he claimed the last time in the same hospital or the other hospital? So it's possible to build those technology solutions. Worldwide, it is possible.
Kapil, I'll just add my 2 cents to this one point. I think, in the example of the hospital that you've given, this is actually a service which is outside the purview of all the insurance partners, unlike, say, a property claim. You're extracting service from a hospital who's not part of this entire. And I think the real problem lies in that. They seem to be a reluctant partner. I've had an example of a hospitalization in the US where, literally we got out, the person who was hospitalized got out of the bed, and they said, leave, and you walked out. We didn't have to sign the paper as well. So they collect the money from the insurance. There's no trust deficit between the insurer TP and the hospital. So I think that's really a third-party issue that we need to overcome as an industry, but in partnership with the hospital, who's actually the service provider. Any other questions? Sir.
We talk in terms of explaining to the client and making him aware. Now, our problem, which is perpetual, is that you give any information to the client, he has no interest to read till a claim comes, and then the blame game starts. Now, I think there has to be a process by which, on record, if I'm the broker, I should have it on record that I have explained to you in a language that you understand, and you have that kind of a disclaimer which says that, yes, I have received this. Now, a time was there when the proposal form had that declaration that it has been explained to me and I've understood. I think that no longer exists. So how to record that the client has been explained so that later on he can't take an escape route?
So I'll actually, on behalf of Bhushinder, I'll make an answer. In fact, I think ICICI is one company who's actually done an exceptional job of this. So they won't bind a policy, in my experience, unless you sign the quote or fill up a proposal form. This is my personal experience. And I think this just requires, courage to say that we won't do it as an industry. And this is my experience. They just bit the bullet and they do it.
I can add one more thing. What we also do is, the moment we deliver the policy, we also give you a copy of the proposal form which you have signed. So that there is tomorrow, there is no discontinuity in terms of what you have given to me and what you have issued the policy. So we make it mandatory. Along with the policy, a copy of proposal form also goes. So what you have given me, a photocopy of that goes to you as well.
Is there any other question? Yeah. So, gentleman at the back.
Good afternoon, panelists. I'm Jaswant Singh. I'm an insurance domain consultant and faculty for insurance and pension studies. My question is specific to the life insurance segment. Like in India, we said that there's a premium collection of 4 lakh crore in life insurance segment itself. So there's a potential size of exploring.
Instead of taking the surrender value, which has penalties at a low amount, I sell my policy. Is that what you mean by tradable?
Sure.
Good.
Vertical
Okay.
settlement.
Just checking that we're all on the same page. Now, yes, this exists in other countries, not all countries around the world, but a few countries. And it has 2 types, first of all. Yes, you'll be aware that some regulators allow it around the world where there is a very serious terminal illness situation. And the customer, rather than waiting for himself or herself to actually, unfortunately, leave this world, they need some money immediately, whether it's for treatment, whether it's to go to hospice or whatever. So they are allowed to sell the policy to someone else who then obviously carries on paying the premiums and benefits it shouldn't say the word benefit, but does benefit when the customer does leave this world. That's allowed, that's one category. Then there's the more general one where whether you're healthy or not healthy, doesn't matter, you at any time can sell your endowment, your whole, anything product which has a cash value. And the buyer, which is insurance companies or specialist insurance companies, keep paying the premiums and then get the bigger benefit. Would it help persistency? I worry that in a deal-making country where everybody's looking for a deal, it would actually increase the low persistency in the sense that that customer who sold it no longer benefits. He's no longer either going to be able to educate his child because he was putting money aside to make sure little Amit or little Priyanka absolutely got to Harvard or wherever. So he's no longer going to achieve his goal and what the original purpose. And I think it might accelerate personally, and we'd obviously have to have a regulated view. It's a good market, though it's a good business in a mature country who understands a bit more about insurance and has higher financial literacy. According to S&P, financial literacy in India, or illiteracy, 72% of Indian population is illiterate, one of the highest in the world, okay? Now, I think it's a bit early for that market, personally. I don't think it would improve persistency. It would improve my company's persistence because it will still be seen to be in force. But is it achieving the original objective of what the customer bought it for? I think it encourages more to sell because they'll get more money. Therefore, I would say it's too early personally for this country, this market, but absolutely it should be something for the very near future. That's personal view. That's not an official view. They don't agree or disagree. There you go.
Can I say something? Yeah. Mine, I'm just saying it overall in general, which includes whatever we are discussing since morning. Maybe some of you don't know, but I had been sitting on the bench of consumer courts for 18 years. I've seen a lot of cases on insurance claims and whatever. Some are good, bad, whatever. I'm not getting into the merits of that. I'm saying now we're at a turning point. Those days are gone. Those policy holders signing and claims and Niyaya, nobody came to me, nobody bothered, all that is over. You have to think differently. I think we're all still talking about the old times. Things are changing so fast. All of you in your companies, get some young people, just 20-year-olds, 20 to 25. Train them about this particular insurance and tell them, come up with some innovative ideas. How to go through to capture the market and win-win situation of making the policyholder also happy. Policyholder is fully aware of what he's paying. He knows, and then he pays, and that is what he expects from you. Going to easier way of doing and get youngsters. I feel we are still in that old thinking. It requires a young mind, and get youngsters in your offices and get them to give you innovative ideas. And they will tell you, and your business will grow and how. Who is the first one? That is the one who will make the market, in their pocket. I honestly feel it's important.
This gentleman is already standing with the mic in his hand, so we'll just take one last quick question.
Good afternoon to the panel. I'm Maniraj from SBI General. My question is to the general insurance fraternity. Here, if you see on the commercial lines front, we see a lot of, we are talking about value addition to the client beyond indemnity. So we see a lot of value addition that happens in a property line or a group health, where in property you have this thermographic survey, electric audit and all this stuff. Whereas in marine or engineering line of business, there is a 2,000 crore market. We are not doing much of innovation or value addition to the client. So how do we see the future on these lines?
Okay. I have a different thought on this. I mean, in a very simple terms, if I explain to you, risk minus the policy is a value addition, right? If anything is a risk, you don't cover in the policy, that you give it as value addition. Who has stopped you to give a customized policy? Why do you want to go back again to customer and say, I want to give value addition? Give your customer a policy what he wants in terms of risk coverage, right? So, why do you want to meet the gap by vast services or value-added services out there, right? Today, we have file and use guidelines. You customize a policy. There is a concept of mass customization. There's nothing which stops you from customizing a policy as per the need. I mean, for example, if McDonald's or Domino's commit you in terms of delivering policies in 2 minutes, I mean, products in 2 minutes, why doesn't this marine insurance covers that? I mean, who has stopped us, any of us to do that, right? So understand the risk of the business or the customer's core strategy behind the business, create a policy around that and give it. I mean, why do you want to go to value-added services?
But customers in today's scenario expect more than what the policy covers. They want what we do before we take a risk, like a pre-inspection survey and all those stuff. So in marine or engineering, I think we are not developed as in India, similar to a property or a group health.
No, I think in terms of marine, I think the large marine insurers are doing marine loss control. I think some of the leading brokers are also engaging with their clients on marine loss control. On large engineering projects, I think it's very routine now to have a marine survey, especially where there's ODC cargo involved. So I think, I think depending on the need, so if it's a simple residential building, I think there's very little value add in terms of an engineering project. But I think in terms of large, complex risks, if I talk about petrochemical, I think there are companies who call in experts from overseas as well. So I think where there is a requirement, I think the industry is very much, even for customer protection, even for its own protection. I think whether it's broker, whether it's insurer, I think they are making some grounds.
Thank you.
With this, I think we'll conclude the session, and I want to thank all the participants for a very enthusiastic and a participative session. Thank you.